YouTube. Margin call. Man, that's a tough name in this business. Good morning, everybody. Tesla, good to see you. Ron, Andy, Sergio, Pete, Tim's, nice to have you. Margin call Victor and the old 452. Good to see you. It's night there? Right on. Well, then, good evening, I suppose, is in order. The odds favorable momentum orator. I like that. Happy Friday, guys. Just a reminder, this is an educational room. We don't tell you what to do. We teach you how to do it. So that's what we're going to do today. We're going to rock it out, have a good time, talk about patterns, talk about advantages, talk about walking into a trade feeling confident, chest out, like almost cocky. Like they're going to have to come get my money if they want it kind of feeling, guys. So that's what we're going to do. Wow, holy crude oil. But before we do it, we're going to check news. Because one of the things about what we do and what I teach and what Nexgen's been doing for the better part of 30 years is just teaching patterns. And patterns repeat themselves, and patterns are, I guess you could even say, predictable. Because the methodology that's taught in this room, the beginner, the remedial, the 101, the hey, welcome to Nexgen, let's get you confident before you try to find all the money in the world trades, are just pretty simple patterns. It relies on trend, a little bit of a fight, and that's it, pinpointing where the fight's going to be lost. But news can upset those patterns, guys. And at 9:45 a.m., we've got the flash manufacturing PMI, notorious for creating big spikes and jumps in the market. If you are with Nexgen Pro Trader funding, there is a 100% moratorium 1 minute before high impact news. And guys, that's put in place because high impact news can disrupt our patterns. It's not uncommon to see it spike and really run, and man, if it does it against you, it sucks. There's margin call. That's what happens. So every morning, checking news, and then every day, because repetition creates recognition. Because when you see the same thing, when you do the same thing, when you hear the same thing, when you behave in the same manner, guys, it becomes easy to do it. And everything that we do revolves around reading charts. Buy a new one. Free resets today, right? Margin call, are you with the funding company? Nexgen Pro Trader Funding? I'm going to let you in on a secret. What I teach on TradingView has been used by Nexgen clients to pass evaluations and get money in their pocket. Brand new. Everybody wants to go it alone. Guys, I'm telling you right now, the T3 indicators have been around for nearly 30 years. And what I'm teaching is the same methodology that Nexgen has been teaching for nearly 30 years. So when I get to the TradingView side of things, guys, I want you to realize this is a plan that I hand out that can be used in your pursuit of victory in those evaluations. We do talk about NinjaTrader. We do talk about Nexgen Pro Trader Funding. And both platforms use 3 rules and 2 charts. That's it. There are more indicators than you price action guys are used to. But what I do is I build this foundation that allows you to read these amazing indicators and recognize advantages that the market's providing. You will turn those advantages into your trades. Chart reading is about 90% of the typical day if you're following a plan. If you're not following a plan, it's much bigger than that. Active trading is about 10%. There's a lot of doing nothing. And day trading, we used to always giggle and say, hey, we're professional waiters, is what we are. That's all right, Tesla. Buy a couple and crank it out, man. Pass those things today. This is your day, guys. This is your get out of jail free card. Get in there. Get that 1-day pass, right? I mean, how cool is that? Guys, you're going to understand through your chart reading three very basic concepts that will carry you to the promised land. You're going to understand where the market is likely to continue. These continuation points will be used for entries. You'll understand where the market is likely to go. You'll be able to use these as areas for profits. You'll see them before the market ever gets there. You could have a plan to get paid at them, and you'll understand where the market is likely to stop. And we call these termination conditions. And a termination condition is a line on a chart that could end a trend. And we're going to go through the concepts of the three rules. And if you really focus on the rules and not the trades, if you really focus on the process and not the profits, you're gonna latch onto these concepts really fast. And then you'll be able to use them to go pursue your success. So the market goes up and down. We know this to be true. Trends are established, whether it's an uptrend or a downtrend. So there's literally three things to do in the market: buy, sell, or wait. That's it. Buy, sell, or wait. When the rules are met for long trades, you buy. And when they're met for short trades, you sell. And when your rules aren't met, you wait. So what happens is when a trend is established, there's almost always a little fight. And we've seen it, right? Little pullback, stuff like that. The methodology that we're going to talk about this morning, whether it is NinjaTrader or TradingView, is designed to pinpoint with pretty silly accuracy where that fight is most likely to be lost. This becomes your entry for the high probability trend trades. And if you can just wait for that fight, you can take a trade that you'll be able to prove with a little bit of study wins more than it loses. That's what we call an edge. When you know the pattern you're trading, typically wins 70 to 80% of the time. And guys, that's exactly what we're looking at. We're teaching a trade that typically wins 70 to 80% of the time, which means that it loses 20 to 30% of the time, which means that if I take 10 of these trades, I'm likely to win 7 or 8 of them, which with a little bit of good management goes a really long way. So it's not about doing everything, being everywhere, knowing everything that the market's going to do. You don't have to know what the market's going to do to make money. Learn some patterns, guys. Learn the rules for when it's okay to trade. I like to say it's okay to trade when my rules are met because my rules provide an edge. And when I'm trading with an edge, probabilities take care of themselves. Good morning, Cav. Good to see you, man. Brace up. Buy lots of Pop-Tarts. You guys are going to get hit. Practice the trades. In 2008, John Novak sent out a document to Nexgen clients saying, take 25 of the exact same trades on simulator. Learn those patterns. Learn what they look like. Learn how to pinpoint everything you need to pinpoint. And then most importantly, post those trades in the room and say, hey, Mark, this is what I saw, and this is where I saw it, and this is what I did. Can you help me? Can you let me know that I'm reading my indicators correctly? Can you confirm that I understand the rules? Did I do it right? And guys, you'll get a private session with me every time you do that. The hope is that you don't practice the wrong trades. And I see this a lot. People are like, well, I've been making money hand over fist. And then the second I go live, I get blown out. And it's a very common story. And it's because on simulator, you've got clackers the size of bowling balls. And you don't care about rules. You only care about green numbers. And guys, it's the process that yields the results. It's the process that provides the process or the profits. So we're going to focus on the process heavily. You've got to keep it simple. You don't have to. Do whatever you want. Don't let me be the boss of you. But if you keep it simple, it's easier. If you learn what the looks are, it's easier. If you focus on the process, not the process, it's easier. So it's up to you whether or not you're going to make it easy. I provided just above you, first of all, I gave you a KISS plan. Whether it's NinjaTrader or TradingView, you've got one. You now have a plan. A plan that defines the perfect entry, a plan that even helps you with the management side of that. But this plan is a stepping stone in your learning journey. It is designed to teach you to read the indicators. Guys, this is not the only way to use the software. This is the easiest way for a new user to use the software because you're going to learn to read it. You'll start to recognize advantages, and those advantages become your trades. So this plan is designed to optimize your chances of success, to give you the highest chance of walking away every day feeling good about what you did. That's where confidence comes from. But through study, through simulation, through class feedback and practice, you will write a plan that suits your needs. So there's one for TradingView. There's also one for NinjaTrader. And then I've also given you spreadsheets up there. And guys, the spreadsheets, whether it's the NinjaTrader version or whether it's the TradingView version, it shows you the patterns. It lets you know exactly what it's going to look like when you're taking a high probability trade. You're going to be able to say without question, this is my pattern, this is what it looks like, this is where I'll enter, that's where the market is likely to go. And you will walk into that arena confident because of the methodology and the time you put into proving it. So I used to say this every day. I haven't said it in a while. I'm going to say it again today, guys. In the first hour of this room, I will hand you everything you need to be successful with this software. Everything. The only thing that I can't give you is a work ethic. So it's going to be up to you to learn the triggers. It's going to be up to you to practice and to ask for help, get feedback, use a mentor. Guys, Tiger Woods, Michael Jordan, Wayne Gretzky, Serena Williams, they all had coaches. Because when you have someone on the sidelines watching you do what you do, it's easier for them to give you feedback because they're not in the moment. That's my job. Keep it simple. Learn the patterns, guys. It's only 3 rules. There is a large chart, strong trigger lines, no termination conditions, define your entry. When your rule is met, it creates the advantage. And it's the 3 advantages that create a trade. A trade isn't your desire to win, your need for money. It's not trying to impress the cute girl up the street, guys. It's just momentum coupled with a clear path and an entry area. We're starting with NinjaTrader here. It only takes 2 charts. That's it. There's a big chart and a little chart, guys. A large chart and a small chart. On your large chart, it's a very slow moving chart. It's a broad stroke of a brush. It shows the overall opinion of the market, guys. This is your big picture. It will define direction, momentum, areas. Rules 1 and 2 must be met on the large chart to ever go look for an entry because your entry is dependent on those first 2 advantages. Once the advantages are true on that 1 bar, the market's going to be trading way low and you're going to be like, holy no. Guys, give me a Y if you can hear me, please. Can you guys got me okay? Okay, thank you. We'll see if we can get 10K to reboot. Guys, if you ever can't hear me, let me know. I'll ask. Everybody's nice enough to say, yeah, we got you, Mark. And that just means that it's probably on your end and you're going to need to reboot your system. Guys, when we decide it's time to take a trade, it looks like the market is gone without us. We use a refinement chart to see that fight, to pinpoint where it's most likely to be lost, and use it for an entry. And that entry is going to allow you to reduce risk, and that entry is going to allow you to maximize profit potential. So only 2 charts, only 3 rules. We're going to keep it super simple. And here is my favorite reminder for all of us. We're not in charge. I'll never be able to make the market go up or down, guys. I can't bend it to my will. So what I do is I follow the large crowd. This is your big chart. These are the investors, the 1%, the man, right? Institutions, whatever you want to call them, I don't care. Bunch of bobs. But the bobs create the trend, and they establish the momentum, and they react at the areas. And if I just stay in sync with these guys, I've got a higher chance of success. Now over here, on your small chart, these are the fighters. These are the people who tapped into their uncle's account, got a couple million, and they can create these fights. These little pushes, we call them retracements. And a retracement is nothing more than a small move counter to the underlying trend. We're going to pinpoint where the small crowd is most likely to get their ass kicked. That becomes our entry. That's where the market is most likely to continue with the large chart. Sorry, I'm not feeling very PC today, guys. We're going to use areas. This is the first set of indicators. Let's see, 10K. Use task manager and kill Discord all instances completely. That usually clears it up. But if the whole class can hear, I feel it may be on your end somewhere. Jason can help. There we go. I hate it when you guys can't hear me because I'm kind of a big deal, but not really. Guys, we're going to use areas. This is the first set of indicators, the T3 indicators. And areas, they do all have names, but let's keep it simple. If you see a horizontal line on a chart, it's bouncy. That's it. If you see a horizontal line on a big chart or a small chart, it can produce a bounce. So keep that in mind as you approach these areas. The driving force of the methodology, guys, is the triggers. The T3 triggers. There are small triggers. There are large triggers. These are moving averages. That feels mathy. I was an English lit major. But 2 solid lines make the smalls. 2 dashed lines make the large. Fast and slow. When they're green, they're up. When they're red, they're down. And guys, we're going to use these trigger lines first to define momentum. Rule number 1 is 100% dependent on the look these triggers provide. Rule number 2, making sure that you're not trading into an area that has an overwhelmingly high potential to stop and reverse that market, is nothing more than a comparison. When the market gets to one of these bouncy things, you're going to look at your triggers and they're going to tell you the story. We're also going to use these large triggers, the dash triggers. See those little tails that like to peek off of that big chart bar? That's the fight. And when it comes into those large triggers, we can define the perfect entry, guys. So triggers do everything. We're going to break it down into 3 rules. That's it. We've already broken it down into 3 rules, but we're going to do them individually. And here is some gospel truth for you. If you don't learn them individually, what they look like so that you can piece them together to create a trade, you will struggle with taking trades. I feel comfortable saying it because I've been watching it for the last 6 years. But here is the happiness. I'm taking these 3 rules, and in the spreadsheet that I gave you, I have given you pictures that are annotated describing why that rule is met. So you have the exact look in green. You have exactly what it looks like when they're not met in red. That's your pause. And even better, like over 400 pictures of you guys being amazing with the software and showing in the room, hey Mark, this is the trade that I took. This is what it looked like. This is how I did it. And I saw it and I was like, oh my gosh, that is so freaking amazing. I want to put it in the study guide for the people coming up behind you. So learning that pattern, guys, that's all it is. And it all starts with strong triggers on the large chart. Strong triggers is the easiest lesson you'll ever get. Strong triggers is nothing more than space between the small and large triggers. That's it. When the background is green on your large chart, you're in an uptrend. When you're in an uptrend, you're looking for rules to be met for high probability trend trades long. When it's red, it's a downtrend. The same is true, looking for rules to be met for high probability trend trades short. Excuse me, had a little gurgle in my belly there. In an uptrend, this is like a cheat code. Guys, don't tell the other kids. Small and large triggers also have to be green, just like the background. In a downtrend, small and large triggers must also be red, just like the background. And if your colors don't match, you don't have rule number 1 met. That's kind of a safeguard. So like if one is green and one is red, you don't have the rules met. If both are red but the background is green, guys, your rules aren't met. So that helps a little bit. But strong triggers is one look. It's the separation between the small and large. So in an uptrend, small triggers break above and away from the large triggers. Now your large triggers must be widening out like sharks coming up for a seal. It's that space, that little gap in between the small and large. It starts small, very often gets bigger, but as long as there is separation between those triggers, rule number one is met. Same is true in a downtrend. As long as the colors match and there's separation between those triggers, rule number one is met. When there is no separation, rule number one is not met. It's almost too easy. When you have the separation, this is my favorite phrase. Not really, I say that a lot. I like all the phrases. When you have separation, the odds are favorable for the market to continue in the direction of the trend. So you're going to hear in this room odds favorable momentum a lot. Odds favorable momentum. I had odds favorable momentum up. I had odds favorable momentum down. Couldn't freaking wait to go look for rule number two. And guys, when you have no separation, you have weakness, which is very, very conveniently the opposite of strong. When you have weakness, the odds are not favorable. Anything could happen up or down. So it's a pretty simple look. It happens on the first bar. And if you open up a large chart, separation is strength. That's it, first bar. Smalls below the large, space between. Do you guys see it? Smalls above the large, space between. Guys, that is your strong trigger look. These little tails that get pooped out of the big fat part of the bar, those are potential entries. That's the fight on the small chart. We'll come back and look at that one and see what it looks like. But can I get a yes in the room from you? A Y, a thumbs up, a smiley face. Is everybody cool? Strong triggers leads the way because it's really hard to stop. Strong triggers is what you're going to look for to break key Fibonacci areas. Guys, strong triggers are going to cover some of the mistakes that we all tend to make as new users. And that mistake is trading in determination conditions. I like the smiley faces in the 100s, guys. It's Friday. Let's get silly. When I have the advantage of momentum, hey Norbert, I'm going to make sure that I'm not trading into one of those bouncy lines, guys. So a termination condition is a large chart endeavor, and a termination condition is an area that could stop the market. And we're going to use a little comparison of the trigger lines versus that area. So in order to define a termination condition, it's a very specific phrase. The same way on trigger lines, separation is strength. Write that down. That's going to take you to the promised land. For termination conditions, the first thing that has to happen without question is price must reach the area. What does that mean? That means that these dynamic Renko bars that go up and down with price smack into Fibonacci support or a divergence low or a yellow 1-to-1, a horizontal line that can be bouncy. Or the green ones hit an area of resistance. And when price reaches an area, all you have to do is ask yourself, where are my triggers? That's it. The answer to that question will tell you the status of the line. So price reaches resistance, where are my triggers? If all four of those trigger lines, too small, too large, remain below resistance, resistance is a termination condition. Resistance is going to do one of three things. I like using pictures. Resistance is going to break. It can happen, typically with momentum, not as much with weakness. Or resistance might create an ugly untradeable bounce that pulls you out of a long position, and then they rail north and leaving you with feelings of regret and remorse. That's no fun when that happens. Or that resistance may completely reverse the market, forming it as a strong top or a strong bottom. I never know what the reaction is going to be. So my simple safeguard is if price reaches an area and none of the triggers get through, I just have to say rule number 2 is not met. I choose not to take a trade directly into that area because more often than not, I will lose that trade. It removes the edge that rule number 2 gives you. And let's see if we can't find a real world example. Price reaches a divergence high in resistance and the triggers don't break, and damn it, there's a loser. 1-to-1, son of a gun. Resistance, egads. We'll move forward. Support, divergence low, resistance. And some of you are going, Mark, how the hell do you ever make money if all those lines create bounces? We trade away from Fibonacci resistance to the next area. And with all of that momentum, guys, that's the money shot right there. That's the one that pays your bills. That's the easiest trade you'll ever take. So this is what it looks like when they hold. That's what a reversal looks like, guys. And this, any trades you take after that reversal going this way is golden. It's got a higher chance of winning. Those trend trades are even better. But if it's going to break, it's an order of operations. Every line that I hit. So if I'm in a short trade, life is good, feeling good, love it. I hit Fibonacci support. Maybe I get paid there because I don't know what the reaction is going to be. If I'm not in a position, all I do is go, hey, where are my triggers? And all 4 trigger lines are above support. I'm going to sit on my hands for a minute. I'm going to relax. I'm going to kick back. I'm going to go toast a bagel, have a waffle, text my wife. I'm going to do anything other than try to predict what the people that control the market are going to do. And guys, every line you hit is going to be a termination condition for a minute, a second, something. Your trigger lines are telling the story, not the price. The trigger lines. Guys, if 2 of your trigger lines smash below Fibonacci support, but 2 of your trigger lines stay above, this is what we call a 50-50 look. This is the potential to break. And on your KISS plan, that happens to be the second trade. Now, yesterday, we changed it to at least 2 triggers through, guys. If you want the highest chance of success on this potential to break trade, at least 3 of the trigger lines must be through the area. 2 is good. It's potential. You may grow into that, but when 3 break through, the potential is greater. And because it's not a clear path yet, you will have to manage these just a little bit more assertively, guys. Getting to break even maybe a little faster. Maybe taking partial profits at the first sign of trouble. And then when 4 trigger lines, both small, both large, get south of support, guys, support is broken. And when support is broken, it actually behaves as resistance. And your path is clear. It's smooth sailing, clear skies, right? Calm seas until you hit the next line. And when you hit the next line, boom, right back to number 1, right back to counting triggers. So there will be times where there's a lot, but let's count triggers every time. Price reaches the big red line. First it reached the divergence high, and when it reached the next line, that's the line that we're counting on. 0 triggers, no trade. Is everybody good with that? I'm telling you right now, if you learn how to identify termination conditions, it's going to set you up for finding trades, even going the other direction. When 2 triggers get above with momentum, it's still a red number 2. You can take a trade if you want. I don't tell you what to do, but I will tell you that it's not really in the scope of high probability optimizing your chances of success until 3 trigger lines get above the area. But it's not a clear path. You cannot call it a high probability trade until all 4 triggers break above that area. Then that area is broken and the path is clear, and with strong momentum, you should be eager to go find an entry. There will be times. Somber voice. There will be times when your path isn't clear because of multiple areas, because it's support after support after support, or resistance after resistance after resistance. Guys, this is 90% of your day. 90% of your day is looking at a chart and in an instant saying, nope, that's not my look. I don't know what the reaction's going to be. Nope, I don't have the best momentum. The odds aren't favorable. I choose not to trade. Guys, the futures markets trade on average $220 billion hourly. The S&P, which most of you trade, Exchange is about $175 million a day. NASDAQ, closer to 270. Um, you don't have to be in every move. You don't have to be the first one in or the last one out. Guys, you can find a way, and I say this without hesitation, to look at the market and see momentum, to look at your chart and say all of my triggers are above resistance, price hasn't reached the next area, let's wait for the fight. And guys, there were actually 3 fights in that clear skies area. How do I pinpoint? Rule number 3. Guys, rule number 3 is a magical elf that makes delicious cookies for your trading career. Rule number 3 is going to pinpoint right where that fight is most likely to be lost. Rule number 3 is super specific, so much so that you're going to use a limit order. It's like Halloween language. You're going to use a limit order, guys. You're going to wait for the market to come to you. That's how good this entry is. And you're going to buy or sell a pullback. Mark, what's a pullback? I don't get it. Is it like a half a bar? No, silly. A pullback is a shove, a push, a fight, counter to everything that the large crowd wants. Guys, the pullback is the small crowd getting in their feels. We're going to buy or sell that pullback, and we're going to do it at an area, at a fib, at a yellow 1-to-1, or a mid-band, not a pink 1-to-1, not a divergence line, guys. Learn which areas trades come from, and here's where the money comes from. That area is going to be inside of triggers, inside of large triggers, guys, because your large triggers are going to show you where the retracement is most likely to go, and your large triggers are going to show you right where those areas need to be. Your entry rules are a pattern. When the large chart says up, let's do this. When the large chart says up, that's what that means. When the large chart has strong triggers, when the large chart has a clear path. Your small chart is trading somewhere here and you are literally turning over saying, oh, I'm never going to get paid. I hate Mark Novak keeping me out of trades. I knew it was going to go up. And guys, then the reversal bar prints. And that reversal bar is the beginning of the fight. It's the beginning of the pullback. And I'm telling you, man, this pattern happens every day, every market. I don't care if you're trading crypto or futures or Forex. This is a pattern that happens. And that pattern, once the reversal bar starts, the fight is on. You can say without hesitation and the utmost confidence that that fight is most likely to go somewhere from the top of the trigger lines to the bottom of the trigger lines. That's your retracement zone. Trigger lines are not bouncy. You need areas inside of those triggers. You need yellow 1-to-1s. You need a mid band. You need Fibonacci support for this long trade. And guys, sometimes there's multiples. Sometimes there's a mid band. Sometimes there's a 1-to-1. Can create a window. Like, we're good, right? But we're not always to the tick good. This is a window. I call it the window of opportunity. And what this window is the most likely spot for the small crowd to fail, for the large crowd to take over, and for that market to continue in the direction of the trend, the momentum, and the clear path. Because of these 3 arrows, strong triggers, clear path, well-defined trend, your job is to activate a limit order just above the highest point of support. And say to yourself, I know that it could go lower, but I don't want to miss that trade. And when you start to trust the methodology, as the market comes down, you're calm and you're patient. I don't have to be in. They're not even in the retracement zone. And then they get to the retracement zone, and you're like, I don't have to be in. They haven't hit anything bouncy. And then they hit something bouncy, and you're like, man, I'm so glad that I'm in. This is where the market is most likely to bounce and continue with the large chart. But if you did your homework, you know that if it goes below it, you're like, I'm cool. I'm still in the window of opportunity. I'm still where the market's most likely to bounce. I refuse to panic. And if it gets to the next level, you're like, ha, there's the next spot that could create a bounce. I'm holding my position. Rule number 3 is still there. The advantage is in play. And even if those yahoos make it to the bottom of the retracement zone, you're like, I don't care. I still have everything I need to feel confident about this trade. And here's the thing that understanding those concepts does for you. It lets you know without question where the market should not go. If this is going to be one of those 70 to 80% winners, it lets you know precisely where your advantage is no longer in play, and initial stops will be placed 4 or 5 ticks beyond the retracement zone, beyond the lowest point of those triggers. Because once I get here, rule number 3 isn't helping me. Once I get there, the small crowd has eaten so many Wheaties and drank so much Red Bull, they've gotten through all the good stuff. I don't want to be in that trade anymore. I don't have an edge anymore. And guys, this will be your 20 to 30%. And you will take losers. Losers are a normal part of a positive equity curve, but you can minimize those losers with great entries. Any lines beyond the triggers are not used for entry in the KISS plan because I don't know if the market's going back up. In a downtrend, triggers are down on the large chart. The trend is down. The momentum is strong. The path is clear. Guys, the small chart is the siren song. And if you don't have those large chart advantages, you are more likely to take an ass kicking at the hands of the small crowd than you are to win. It's just a fact of life. Reversal bar begins the pullback, is not the entry. It's the start of the fight. Fight's most likely to be taken somewhere from the bottom to the top of those triggers. Fight's most likely to be lost at the area inside of the triggers. Your job is to study this methodology, to practice it, to go back and look at these patterns until you have the confidence to activate a limit order just below the lowest point of resistance. Any lines beyond the triggers are where the market should not go. They are not used for entry. That is where your initial stop will be placed. That is where you will willingly and happily accept a loser because you know that anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. And if you piece the two charts together, it is momentum, at least the potential to break, and a pullback to an area inside of triggers. We don't trade these tails on the large chart, but guys, we can use them to study and become smarter without ever having to take a trade. And I'm going to show you what I mean. And this is important. We're going to do a lesson here, guys. Let me know what you think. Bum, bum, bum. Does everybody see on the large chart, first bar, most current bar, that the market has odds favorable momentum? Dun, dun, dun. That the market has a clear path. Here, we'll give it one more. Bonk. You guys see it? And it's trading all the way up here, right around 40. If you're new with me, play along. If you learned the language, I'm going to buy or sell a pullback at an area inside of triggers, you know when the market is still screaming up that those triggers define your retracement zone. And you know when the market hasn't even offered a reversal bar that your rules say your entry is going to come somewhere in that tiny little box. You guys see it? Areas inside of triggers. You can activate a limit order. Oops, it's on the wrong side, so we're going to do this. You can activate a limit order just above that highest point of support, and you can say, come get me. And there's your reversal bar. And here they come. Son of a bah, they didn't get us. Who wants to just jump in? We should jump in, right? Because with all that momentum and all the clear path, there's no way we're ever going to get paid if we don't jump into the market. That was what I thought. And they're going, and oh, I'm sick to my stomach. And then another reversal bar, and the rules are still met, and I still have an area inside of triggers. And honestly, life's even better because the only area inside of triggers that I have is that mid band. I know exactly where the market is most likely to bounce and continue. And it comes down, and it hits my order. And I'm in a long trade with all of these advantages. And I know without question my stop belongs about 5 ticks below the triggers. Whoops. And then I hit the wrong button. All right, there was our entry. And then it comes up, and there's some money to be made. And then they pull back, and I'm scared, but they really just wanted to go back up. And sometimes the market dances. And inside of that amazing bar that gave you all the love, let's see if we can stretch this out a little bit. All of this happens on the small chart. All of that retracement, all of that bounce, all of that indecision, and the large chart never changes its mind. The large chart always said up, and the large chart always said momentum, and the large chart always said room to targets. And guys, when your large chart has that level of conviction, there's a really good chance they're going to make that fib. So that's your high probability trend trade. That's the first trade. That's the beginner's trade. It's just a pattern. Whether it's in November, whether it's 2021, good morning, Wayne. Whether it's in 2022, whether it was this morning, that's your pattern, guys. Learn the pattern, learn the rules individually, piece them together to make the greatest trade you'll ever take, the most confidence-inspiring trade you'll ever take. And if you keep it that focused and simple in the beginning, if you give me 30 days, you know what, Mark? I'm on simulator. Don't give two shits about the profits. I just want these advantages. If you start reading your chart in terms of advantages, you know when you have the perfect trade. Yeah, there's a good chance, Cav. There's a lot of people not in the room, and I'm guessing they're bracing for the weather. When one of your advantages goes away, you know that you're medium probability. When two go away, you can say, yeah, I'm low probability. I don't like this. Guys, you're in control of the entry. You're in charge of the management. You make the decisions. You don't have to be a victim to the market, guys. Let the market do what the market does. Wait for the market to produce your advantages. Find your way to get in. Know what's working for you and against you so you can make good decisions. And guys, once you see that best trade, it opens the doors for the rest of the trades. That's Ninja Trader. Now Trading View. You guys that are in the prop firm, I'm about to give you the keys to the kingdom. Do not tell John Novak. I'm going to give you everything you need to survive your evaluation, to take it to semi-live. And I firmly believe this. It'll be up to you to follow the plan, though. But Nexgen users have been showing me between 73 and 80% winners on a trade that only takes 3 rules. 3 rules. 2 charts. I don't know how to make it any easier than this. Guys, I'm not that smart. This is perfect for me. My 15-minute chart on TradingView, it uses minute bars, not Renko bars. This is my big crowd. These are the men and women that define the trend. These are the men and women that create momentum. These are the men and women that react at areas. These are the people whose cool club I want to be in. The smaller chart, 1 minute, it's going to define the immediate strength using the small triggers. And it's going to define entry points, right where the fight is most likely to be lost. And guys, Siva, I see you in here. You remember this. In 2004, that's a momentum trade. Sorry. Dag nabbit. In 2004, Nexgen was still teaching this exact same methodology, guys. 21 years ago, 22 years ago. Define your trend. Let it pull back to an area. Wait for your entry signal. Take it to the next area. Guys, this is nothing new. This is a methodology that gives you insane accuracy on entries and keeps you out of the fight. So, indicators. I forgot the word for a second. 15 minutes. 15-minute chart. This is it, guys. You have triggers. They are either up or down. Now, if they're cyan, they're up. If they're white, they're down. But I'm going to be real honest for a second. Guys, if they're going sideways, I don't care what color they are. They can't decide the trend. How can I trend trade? Let them be decidedly up. Let them be decidedly down. That's the easiest path, guys, defining trend. Small chart has small and large triggers, guys. That separation between small and large defines strength. You'll use that for the second trade on the KISS plan that you were given for what we call a momentum trade. I don't even discuss it in the morning because you got to work through the trend trade to get there. Areas are bouncy. I gave you guys the PowerPoint that I use. I would encourage you to know which ones can be used for entries and which ones are only in the termination target range. And now we're going to break it down. The trend trade. I spent 5 years on NinjaTrader before I came to TradingView. It took me about 3 weeks to make the transition because I kept trying to trade TradingView like I would trade NinjaTrader. I would keep taking NinjaTrader rules over to TradingView. So I do encourage you guys, because I am an encouraging sort of fellow. If you are making that transition, do not try to make TradingView kiss like your old girlfriend, guys. It is apples and oranges. It is two very different bar structures that while they're very similar, the rules require just a little bit different. You do have to define the trend. And when the trend is defined, the first two rules are the exact same rules on two different time frames. The first rule says don't trade directly into areas. Directly into areas. Don't walk into a door. Don't start your walk to the other room into a closed door, right? Start at 10 feet back so you have time to open it. Your 1 minute, not trading directly into areas. Clear path is probably the most important part of this methodology on TradingView because areas are bouncy and we want to have room to targets. Rule number 3 for entry says buy or sell a pullback at a 1 minute area with a close on the weak side of the triggers. And I'm going to show you what the weak side is. But guys, it's the exact same thing. Define a trend, wait for the fight, capitalize on the small crowd losing. Trend is defined with small triggers on the large chart. They're either up or down. That's it. They're either up or down. If you can't tell, it's okay to do nothing. If you can't tell in the beginning, you'll find ways around it. But in the beginning, guys, let them be decided, up or down. Rule number 1 says 15-minute, not trading directly into areas. What does that mean? That means that from wherever I'm going to enter the market, I better have room to trouble. I have to have room to make money. Guys, I watch people every day trade into these areas and lose. Don't be one of those people. On the 1 minute chart, from wherever I enter that trade, there has to be room to trouble. I have to be able to make money, guys. As a brand new user, leave yourself $100, $150, right? I don't react fast enough. I need that time. As you grow with the software, you're going to see more opportunity. You're going to see so much more opportunity than you saw as a brand new user. But if you learn how to make the easy money first. Guys, give me a Y if you can hear me, please. Phil pissed me off yesterday, so I just tried to mute him. Good, it worked. Awesome. Just kidding. I don't remember the last time I was mad. But let's tell him. Tell him. It's you. Reboot. Aruni. There we go. Thanks for those yeses, guys. Not trading into an area, which means that if I take a short trade, I want room to make money. If I take a long trade, I want to be able to get some cash in the bank before I hit something solid, guys. It seems silly, right? Well, of course, I'm not going to trade into an area. Your fear of missing out is going to have you trading into all sorts of areas if you don't commit to it early. And then entry is just a pattern. I love patterns, guys. A lot of you are my age, and back in the 80s, on 1 quarter, you could play Galaga for days, right? You could play Pac-Man forever and never get eaten because you knew the pattern. Trading is very much like that, guys. When you follow the patterns, good things seem to happen. And when you deviate from the patterns, that ghost eats you. So this is your entry pattern. This happens to be for a long trade. The trend is up. The path is clear. And then these small triggers roll against you. Guys, this is the beginning of the fight on TradingView. Not so much a reversal bar, because you could get those all day long. It's those small triggers going from up to down, changing their direction compared to the large chart direction. Once those triggers roll down, I have to wait for a lower area. I don't know if it's going to be the mid band or the 1-to-1 or these 1-to-1s. Hell, I have no idea. But I do know that price needs to pull back to something bouncy. When it gets there, I don't just jump in, because the small triggers on your 1-minute chart define the immediate strength, guys. It is maybe not a freight train, but it's definitely a four-door sedan with a really cool hood ornament. And if you step out in front of them, you're likely to get flattened. So your entry for a trend trade says if I'm looking for a long trade, my entry is an up bar because I'm going up, but I want both corners of that bar to finish above the small triggers that are against me. That's the weak side of triggers. That's where reversals tend to come from. That's where the advantage is held. That's where the market is most likely to reverse in the direction of the large chart advantages. So you might wait 20 minutes for that bar. It's worth the wait. And the same thing is true even without the rules met. That descent to your great entry begins with a close below those small triggers, guys. That little patience piece will keep you from getting run over. You NinjaTrader users, oh, I'll just buy the areas. Areas have to hold. It doesn't work that way on TradingView. When the triggers are up, when there's room to trouble, my fight is defined by the small triggers rolling. Because the small triggers roll, I will look lower. And I won't just look lower and wait for a close above. I will wait for price to reach an area, guys. Language is so important on the entry rules. And when I reach that area, my entry is an up bar where both corners close on the weak side of those small triggers. Guys, if you're really following rules, you won't see your entry until the next bar because you have to let your timer hit 0. In a downtrend, room to targets, small triggers rolled. I define the area. I wait for the down bar that finishes on the weak side of the triggers. Guys, this methodology, it's solid. This methodology is nothing new. The methodology that I teach in this room is the exact same methodology that I use myself. The triggers are up, but Mark, they're rolling. No, until they roll, they are up. There's room to targets. Guys, the pullback started way the fudge up here. It finally gave me entry rules right there. And it was a pretty easy trade. And he is 10K. He is on. There's 2 tickets. What's your ticket number? Oh, he can't hear me. That's why he's asking. He is... I hate it when you guys can't hear me. But I want you guys to see something. I took this trade. This is just my morning coffee wake up sim trade. Felt pretty good about it. Victor matched me step for step. He broke the rules on entry because he anticipated the close. Probably with 2 or 3 seconds left, 3 or 4 seconds left, He felt good about it, took the entry. Nothing wrong with that. You'll get to that point. Um, exact same trade, darn near the same entry, darn near the same exit. And I mention that not because I'm a badass or Victor's super cool, but because we are different people in different places with different backgrounds, different knowledge, certainly different IQs. Victor's probably got me smoked. But if you learn the pattern, if you just learn the pattern, you can be as successful as anybody in this world. And the more you fight those patterns, the easier it is. Yeah, for sure, Paul. And he does. He does a lot of work. He does it for both funding and software. He's gotten a lot of help in software. John's even taken on a tech role in funding. But yeah, Jason is spectacular, guys. He is phenomenal. And there's nothing that he can't fix. And usually when we're so frustrated, he goes right to it and fixes it in a matter of seconds. Do you guys see? This is pretty cool. Didn't break, didn't break, didn't break, didn't break. The S&P is literally like, hey, guess what? Here's your range. I'm letting you know when you get bored that we've defined a range. I'm letting you know when you wish you were in a trade. These areas don't want to break. These areas don't want to break. I think some of you price action people are like, oh, look, it's creating a gargantuan blah, blah, blah funnel thing using trend lines. And you know what? That's not so bad. It's got to break out, right? Fibonacci's helped define it. A lot of people use trend lines, but they're stuck like Chuck. Let them be stuck. You don't have to be in that move. You don't have to be there. So, guys, that's my first hour. It's the same hour every day. Every morning, I give you the rules. I hand you a plan. I give you study sheets so that you can get the absolute most out of the software as a brand new user. Everybody has the ability to simulate and to practice and to, dare I say, make mistakes, guys. It's okay to make mistakes. It's all right to have challenges. It's all right to not be brilliant as a brand new user. For the love of fuzzy, you're a brand new user. If you really want to get to where you want to be sooner than later. If you're on NinjaTrader, every time you think you see a trade, every time you have a question about a rule, give me a picture with some annotations telling me what you saw and asking me if it's right. And if you took a trade, describe the momentum. And don't just say, yep, momentum. Talk about why it's momentum as a new user. Say, man, the smalls are below the large and the colors match, and this is strong and rule number one's met. And really cement the idea that momentum is an individual thing. It has nothing to do with areas or price bars. It's just separation because separation is strength. Reinforcing the visual with language. And then when you talk about your terminations, go through the recipe. Use the language. Price has not reached support. 3 triggers through the previous area. This is only the potential to break. Manage it a bit more assertively, right? So now, before I ever look for an entry, I know that I have to manage this trade a little more assertively, guys. The very basic rules set you up. I sold a pullback at an area inside of triggers, but because it was only potential, I waited for a reversal bar on the smaller, faster chart. I took profits at treble, and I had a trailing stop. Take this chart, drop it in the room, and say, Mark, how'd I do? And we will celebrate every victory, and we will chastise you incessantly if you made a mistake. Not really. We'll find your mistake, and we'll teach you how to fix it. If you're on TradingView, I encourage you to go through this process. Talk about the direction of your triggers, not because I don't know which direction they're going, because you're reinforcing the idea that trading with the trend creates an advantage. Talk about your room to targets, not because I'm not going to see that big ugly zone you traded into, because you're reinforcing the idea that when you have room, trades tend to be more successful. And then use the language, because the small triggers rolled up, I waited for a pullback to an area, but I didn't just jump in like a Yahoo. I waited for a down bar that closed below the triggers, and off we go to the races, guys. If you go through this, you're literally writing a recipe for success in your trading. You're telling yourself exactly what you need to see in order to feel comfortable with an entry, and it really will. It'll make it easier on you. So you're going to be very tempted to do this right here. Is this a trade? Hey, Mark, is this a trade? Well, I don't know. What's an easy way to find out? Let's go back to the core. Let's go back to the things that create the perfect trade. And let's ask ourselves if we had them. Will you guys play along with me? Did I have the advantage of momentum in this particular look? My smalls are above the large, and there's space in between. What do you guys think? If you're new with me, this is your pop quiz. Let's see how you're doing. Does this chart offer me the advantage of momentum on the large chart? Has nothing to do with lines, has nothing to do with price bars, has nothing to do with pullbacks to areas inside of triggers. Is there a separation between the small and large, letting me know that momentum is on the table? That's it. That's your first read every time. It hurts my soul that not one person knows. Yeah, guys, that's momentum. And now I have to ask, do I have a clear path? Well, what's the recipe for a clear path? Price reaches Fibonacci resistance. How many triggers have broken through? It's a goose egg, right? None. Why the hell am I looking for an entry? Why would I want to trade directly into an area of resistance that could stop the market? Well, maybe I'm a freaking Yahoo. I don't know. Can I define an entry? Watch this. That's gone. 50% of my large chart advantages are gone. Can I define an entry? Yeah, there's a pullback to an area inside of triggers. Guys, I'm 2 out of 3. That's a medium probability trade. I go into this trade with the understanding that that look is more likely to stop the market than it is to break. If I choose to take the trade, I better be aggressive on my management, getting to break even quickly. It doesn't mean that you guys can't take a trade. It just means you're missing 33% of the good stuff. Get your management hat on. And there will be other factors that may weigh into that as you grow with the software. And sure enough, look at that, it broke. Pete loves this trade because Pete says with this level of momentum, with no divergence, with strong triggers, with a low risk entry, it's worth it for me to see if that area breaks with all that momentum. That is what the experienced trader does. The new user has to sit and go, damn it, it's just not my trade, and now it went without me and I hate Nexgen. Now I don't have momentum. Now it's only the potential to break. Now I'm losing momentum on the smaller, faster chart. Some of you will take this trade anyway. That's up to you. But I'm missing 2 out of 3 of my advantages, and it already broke through the only areas inside of triggers. I don't care what this market does and doesn't even come close to fitting my plan. So what we're going to do is we are going to keep going forward on our journey. I'm going to take about 5 minutes. I'm going to go scratch my dog behind the ears because don't omit the dog loving. And when I come back, we're going to look at the charts that you guys have posted. I'm not going to be the trade police. I expect that you will not either. We're going to look at the chart read as annotated on the chart. We're going to make sure that it's accurate. And if it's outside of the KISS plan, what we're going to do is we're going to say, okay, maybe that's not the best of the best, but let's look at your chart read and see what you did. Man, they missed us, didn't they? I have momentum and a clear path. and an area inside of triggers. Get down there. And I know where the market shouldn't go if it's going to be a winner. Where's the market likely to go? How about Fibonacci resistance? What do you guys think about that? 3 divergences. That's a small chart termination. I won't risk anything on it. Where's that fib? Let's see if they want to make it. Guys, that's it. That's how quick your reads happen. We've already made some money. We've got absolutely nothing to lose. I either make 30 bucks or I make 350 bucks. Do you guys see it? First it was momentum, then it was a clear path, then it was a pullback to the area inside of triggers. I got paid because I like getting paid. I'm protecting my investment. It either goes or it doesn't. I don't care. Doesn't matter to me. I've already been paid. 3 divergences in the same price range is a termination condition, but with this look on the large chart, that's the most likely reaction. Welcome to Nexgen. If you can't take that trade with confidence, you're going to struggle with the rest of the trades. And anything that happened after that red line where the market was likely to go, that's not my money. I'm not going to worry about it. This is where I drop the mic. I'll see you guys in 5 minutes. Go stretch your legs. I'm back. So, Nathan, we're going to answer your question first. And I want to do it, and I want to go back to some pretty cool basics. So there's three things that happen when price reaches an area, right? One of them creates a termination. One of them gives potential. One of them provides the clear path, right? You comfortable with that, with the trigger counts? Termination is 0. Potential is at least 2. Clear is 4. Cool. So this is another one of those times where I really believe language pays dividends. A strong top or bottom is first a termination condition, which means that the only option for a strong top or bottom is 0 triggers through. And then when it reverses the market, that's when it becomes a strong top or bottom. I do like to go back to the language a lot, and I really do think, guys, you could create in your own world, before we get to chart reads, if you wanted to. If you're like, you know what, this guy might be onto something with language. For strong triggers, separation is strength. Commit that to memory. Termination condition. Price reaches an area. No triggers get passed. For entry, whoops, I will buy or sell a pullback at an area inside triggers. And what you're doing is you're creating this anytime I'm wondering, is it strong triggers? Well, I go back to the idea that separation is strength. And it instantly clues me into the idea that no separation, no strength. And when I'm wondering about termination conditions, is it a termination condition? Well, if price reached the area and no triggers got passed, absolutely. And then you could take that even further. If price reaches an area and only 2 triggers get passed, it's potential, not a clear path. And you can create these phrases, guys, and every time you're looking at your chart, have your cheat sheet. What does it say about strong triggers? Well, is that met? What's it say about termination conditions? Is that met? And you really can create a correlation between what you see and then typing out what it means to you. No, it can't be a termination, Nathan. It can't be a termination condition. A termination condition means that price reached the area and no triggers got through. So if a 50-50 doesn't work, watch this. Let's go to the live market real quick. I love that we're doing this. Let's see if we can find one. Well, fibs have been holding like a mother scratcher, so I'm actually having trouble finding one. I mean, seriously, fibs are good. There we go. So Nathan, 3 triggers get through, right? But it doesn't break. So I'm gonna do this. Hold on. Right there, it was a termination condition. And if that right there reversed the market, that would be a strong bottom. Then it had the potential. Then it had better potential. But that potential fails, right? It's not a termination condition because it doesn't fit the language. What it is it's a failure of the potential to break. But very often, when those moving averages, which the small triggers are, can push beyond areas. We don't call it a strong top or bottom because when a reversal doesn't come from a textbook termination condition, very often the people in charge are looking to get to that next key area. Divergence is not a fib, but conspire. No, you're not using language. Termination condition that reverses the market. Never reference fib. I never reference one-to-one. But there's a one-to-one that stopped the market as a termination, reversed it. That's a strong bottom. Trying to find a textbook example. That's a fib. No triggers through. Reverse the market. That's a strong bottom. That's a divergence low. No triggers got through. That's a termination. That's a strong bottom. Does it make sense? Don't even worry about what the line is. If it's a line, if it is a termination, if it reverses the market, that's a strong top or bottom. Pretty cool, right? So you have to know what could create a termination condition. You have to know which lines qualify, which is pretty much all of them. But you can also use the idea, see if I can find a picture of it. If the midband behaves as a termination condition because the large triggers were a full bar away and it reverses the market, even off a midband, you can have a strong top that pushes down. No, not at all. So this is not a termination condition. Does that, and why? Let me show you. Good question. I see what you're saying. So the market comes up, and there's the very top of your pivot where divergence happens. Nathan, you don't know about that divergence. It's only potential until the market gets about down to there. That's how long it takes for the software to run all the appropriate calculations to say, yep, price and momentum didn't follow one another. So the market actually, price creates this line. It doesn't reach that line. But when it comes back to that line that was created, that's when it can be a termination condition. Does that make sense? That's a good question. That's a really good question. So that's not a termination. But when price reaches it, wow, how's that for good timing? But when price reaches it, none of the triggers break. Now it is. Good stuff. Good questions. Hey, Cav, be safe, man. Good questions. And there was momentum, and there was path, and there was a pullback to the areas inside of triggers. Rinse and repeat, and it's coming from a strong bottom. All right, guys, let's get going on your pictures. Good lessons, Nathan. Keep them coming, man. And guys, if you're in the business of handing out Christmas cards, you should probably give one to Nathan. He has given you guys more good lessons in the last 48 hours with all of his questions. And that's exactly what makes this room amazing. So thank you for that. All right, we're going to get going here, guys. I'm going to click on all of the links, and then we'll start breaking them down one by one. Remember, I don't mind telling you that you broke a rule. And it's not because shame on you, you broke a rule. It's because I want to know that you knew that the rule wasn't there. I want to know that you understood that you took a chance and maybe need to manage a little more assertively. Doesn't mean there wasn't an amazing trade. Just means that if you know that it's time to manage, you're less likely to lean on hope. You can keep it a little more pragmatic. Dun, 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 dun. I love that. Thanks, Nathan. All right, guys, here we go. The triggers are down. The path is clear. The pullback to the area. The close below triggers. The money in pocket. Paul W., absolutely perfect trend trade. Guys, that's it. 225. 2 of those a day is a 6-figure income. Nicely done, Paul. That's a good one to start with. Triggers are down. Pulls back to the area. Closes below the triggers. Money made at the mid band. Trading the ES here, right? And then it does bounce and takes you out of your position. Room to areas. And you were in at 64. And you were out at 62.50, point and a half. That should be more than 75, right? Point and a half. Yeah, no, that is 75. So maybe a little tight, right, Paul? Maybe 75 bucks to the bouncy thing isn't enough. Maybe you have to make that decision. You have to make that decision. For me, I struggle going into work for 75 bucks. Triggers are down. Pulls back to the area. Closes below. Beautiful, beautiful. No, just don't even worry about momentum. Who cares about momentum? You didn't have room to make money, Paul. You could find 1,000 reasons, right? But the triggers were down, the path was clear, the pullback was good, the entry was solid. There just wasn't room to make any money. If you hoped that mid-band would break, then you're not trading probabilities, right? Because from the weak side of the triggers, that mid-band's more likely to create a bounce, which means you entered a trade knowing you only had $75 worth of profit potential, and your risk was probably about $350. It's a little disproportionate. So it's just room to targets. That's all it is. It's just rule number 2. Don't worry about the momentum. Worry about the rules, right? The rules, just the rules. The momentum sucked here, but the rules were met, and it worked beautifully, didn't it? Because you had room to trouble. That's kind of the point I'm trying to make. That was odds favorable against you, Paul. But because the rules were met on the large chart, because there was room to problems, you didn't have much trouble getting paid on this one. And only you can decide what is proportionate or not, right? Triggers are down. Pull back to the area. Close below, but it didn't quite give the close below. Decided on direction. You said the 15 minutes not decided on direction. The 15 minute, Paul, is 100% convicted down. 100% the conviction is there, it's down. What doesn't the 15 have? A clear path. But from where that entry was, you had room back to the top. So there was room to make money. That white bar would have been an appropriate entry should you choose to take it. And I don't know if this is the same trade, but I believe it was. Wasn't it? That's the exact same trade. You just rebooted. So you don't see. So there's the entry. There it is going straight to trouble and even beyond. Close below small triggers I didn't like. Why? Because your opinion sucks. The same way my opinion sucks. Well, I don't like that close below the small triggers even though all my rules are met. Shit, I just lost a winner. I just missed the winner. Guys, my guts are the worst traders in the history of traders. My opinions is the worst opinions in the history of trading. You've got to get to this point where it's crazy mechanical. And that's what simulator is for. Either my rules are met or they're not. And if you're on simulator, who cares if it loses? If you're scared to lose money on simulator, guys, you're going to get the snot beat out of you in a live market because you are going to be so fearful of every tick. So if the rules are met, take it. See what it does. Make some notes. Build some confidence. You did chicken out, Paul. And now it's just remorse, right? Look at it go. A continuation short or a bottom. I don't know what a continuation short is. But until everything rolls and goes the other way, that is not a bottom. Your triggers are still down. But rule number 2 says, Paul, you got nothing to do. Paul, rule number 2 is saying don't trade into areas, and you got areas everywhere. And let's just be cool for a second, right? Because we know that the easy money comes with room to targets. When I try to predict if it's going to be a bottom, it does that. And that's exactly what it did, right, Paul? You're like, oh, potential bottom. Bullshit. Look at those triggers. It's a downtrend. And it's directly into a termination condition now. I know it sounds silly and maybe I sound wound up, and I'm really not. But we've got to learn to trade the plan without our opinions first. And guys, there's time for opinions, but when you really trust your plan, you're going to find that your opinions probably suck in comparison to the plan. I formed an opinion this morning, Paul. Full transparency. I decided, because of my trading view charts, that the market had to go down, and I ignored every red flag on my NinjaTrader charts, and I took a 50-50 with 2 divergences with a reversal bar directly into an area, and I gave up $600 from stupid opinions. Thank goodness I walked away, poured a cup of coffee, played with my dog, and said, okay, dumbass, go trade your rules, and I got it all back. But I should have been done with my day. There's a reason the rules are in place, guys, because the rules define an edge. With momentum and path, it's awesome. With 2 divergences, it's still cool. With the pullback to the area, and my goodness, now all the indicators are going the same direction. Pete, when I was looking at this morning, I said out loud, man, great patience, Pete. Great patience waiting for everything to come back in line on the small chart. And then those jerks print the 3rd divergence. And Pete's like, son of a gun, that's a deal breaker. And he takes a little hickey, couple ticks, who cares? Little ticky hickey, guys, it's going to happen now and then. Nice job, Pete. I was impressed with the patience. 4 triggers through, room to trouble. That's the Nexgen momentum trade off of the fib. Gets in on the way down, rides the momentum, gets out above trouble. I believe this was Cav. Nice trade. Nice trade. Maybe that wasn't Cav. That might have been Jen. That was Miss Jen. I like that you said Miss Jen. We are getting some Southern in you, Jen. People in the South don't have last names. You are Miss Jen. You are Mr. Pete. I grew up Mr. Mark. Nice trade, Jen. Miss Jen, sorry. All the momentum. Potential to break. Man. Limit order just above the triggers. And Cav has already left, guys. So I want you to, they do. I loved Ozark. That was a good show. People create their own rules. No, this is a crap entry. No offense, Cav, if you watch the video. I want you guys to see this. You have a set of rules that says your entry comes from right there. The low freaking tick of that fight down. No worries. And if you jump in here, all you did was shorten room to profits. And if you jump in here, all you did was increase your risk. And I want you, and this is the most important part, limit order just above the triggers. Not the area inside of triggers, limit order just above the triggers, which is not rule number 3. Now, Cav's been doing this long enough. He's very comfortable with what he's doing. But guys, if you're just going to jump the fudge in, it should be on the other side of those small triggers. Because once you're here, that's where retracements happen. That's where pullback to areas happen with that look. And where is it likely to go? All the way up to trouble. It's a good hold, but it gives away about $150. Jen says, I can't go short. That's a termination condition. All the triggers are above. Absolutely no shorts. Why on earth would I take a short? And then her small triggers roll up and she's like, wait a minute, my fast moving average is starting to point north. Jen says, well, I'll let it come back to those triggers and then I'll catch it on the way up and I'll get out of trouble. And now I posted this in the room and I'm going to do it again. The trade that Jen took, whether she was aware or not, is from the 2004-2005 plan. Hit a termination condition, let the small triggers roll, sell a pull back to the small triggers. Jen, you weren't alive in 2004, as young and wonderful as you are, but that's the trade. It's a great trade because it had room to trouble. Nicely done, Jen. I like it when you guys do things and I get to tell you, Nexgen has been teaching that for 20 years. For 20 years, Nexgen has been teaching that trade. That's the trade that you start to see when the trend trade happens. And that's weird, Jen. You are the only woman in the world that does that. You are like a unicorn. Can't go long anymore. Small triggers roll down. He got it a little early. Jumps in just hoping to get back to those one-to-ones. Not quite rules met. A little gun jumping. But if I'm not mistaken, that market just crashed from there with the exact same look. It sure did. All the momentum. And again, and I'm going to say this, and Cav's not here. And guys, this is so important. Listen to me. Both ears. Pull back to an area inside of triggers. Pull back to an area inside of triggers. Learn that phrase. Pull back to an area inside of triggers. This increases risk and it reduces the distance to trouble. Every time. This is the, oh no, it's probably going to go without me. I better hurry up and get into the market just in case. And that's fine if you're willing to sit through those holds. Me personally, I hate getting run over. It gives me anxiety. Not really. I'm not a very anxious person. There are 3 different entries. And I made this picture because it really is this common, guys. The first entry is the, oh no, it's going without me. I better jump in. I'll call it a jump the fudge in trade because there's momentum path everywhere. And there's nothing wrong with that because a lot of the times it'll go. That's what we call the chili dog trade. Thanks, Ron. But that reversal bar right there says, hey, guess what? Your trade failed. It's done. It's over. It's a crap trade now. What are you doing? You're on the wrong side of those triggers. The momentum isn't there. It's a great exit, but people hate to lose. And then the market comes down, and it doesn't quite make entries, and you get a little spike on that smaller, faster chart, and I call this the head fake. And it's usually the high tick. I see you guys presenting an entry in this room. And it wasn't your entry rules. It was the, oh no, it's going without me entry. And then like the pattern typically does, it ultimately comes back to the area inside of triggers. These 2 entries give you virtually no room to trouble. Tiny little profits with huge risk. And they're hard. It's hard to believe that you have to wait for that entry. And guys, if you study the methodology, if you practice it, if you go back and look at it, if you market replay it, if you take 1,000 pictures of it, what happens is you suddenly refuse to enter the market if it doesn't give you what you want because you're in control. Victor, whoever taught you this trade is genius. Whoever told you that when the triggers are up, when there's room to trouble, when you wait for a pullback to an area and you enter on the correct side of the triggers, whoever taught you that is probably a handsome man. Guys, it's the most basic trend trade that we teach. And Victor made $660 on there. I'm feeling so good today. I'm feeling so good today. That's 16 points on 2 contracts, $660. Great job, Victor. Only one trigger through. Jen says that's not my trade. That's not even the potential. Jen, did it keep you out of a loser? Did it bounce back up? Is that where all that consolidation started? Yes, it did. There's nothing better than saying, no, that's not my rules, and then watching it go against it and go, whew, thank you, checklist. Great job, Jen. Guys, if your rules aren't met, take some pictures. Talk about why they're not met. You'll be surprised at how much easier it is to follow rules. Strong trending market? Not really, Pete. That's weak triggers right at a fib. Strong trending market is that railroad track, right? No momentum on the small chart. You just hope. I'm just going to arbitrarily jump in because I'm a tick above trouble without momentum, and I'm going to hope that mother scratcher goes up, and Pete, it did for you there. Congratulations. You pulled one over on the market gods. No momentum, no clear path, no momentum, never even broke the area, and Pete got paid. Those are the trades that give us a Superman complex. 15-minute down, no clear path. You take the entry anyway, and you make a bunch of money. Take and manage, Paul. Willingness to break rules because you felt 2 out of 3, medium probability, take and manage. And Paul, can I throw props? You had room to get to the small chart trouble, right? You didn't have any immediate action resistance or support in front of you. So you had room. So when you got there, you could just go break even if you wanted to and see if it breaks. 2 out of 3, take and manage if you feel that's best. You guys that do take and manage, I encourage you, get some statistics on it. How many times when I trade inside of a 15-minute zone do I win the trade? How many times do I lose? What are the factors? If I'm inside of the zone, if I'm against odds favorable, does that win more than it loses? That's what I encourage you guys to do. If you're going to break your rules, get some hard data on how often it wins when you break your rules, and then suddenly you create new rules. Jen says everything is down, Mark. I don't care about this because I needed the pullback to the area. There's my close below. There's me making a lot of money on the perfect trend trade. It is a coin flip, Wayne. I agree 100%. But I don't tell you guys how to trade. When I say something like, hey, go back and do the research and see if it wins more than it loses, guys, I know the answer. There's a reason I don't tell you in the KISS plan. If it's in a zone, don't worry about it. I wouldn't mention room to trouble if it didn't create an advantage. So if I ever say in my passive-aggressive voice, hey, you probably want to get some statistics on that, it means that I've already gotten statistics on it, but it doesn't hurt to make you guys do a little work. Pull back to the area, close below, get in with the close, tons of room, out for money. From 29 to 27. Oh, okay, that's S&P, not NASDAQ. Great trade, Jen. It's perfect. That's the perfect trend trade, once again. The trend is up. Room to trouble. Pull back to the area. Perfect entry. Notice this bar while annotating actually broke below the zone it would be resistance. You're absolutely right, Wayne. Taking a chance on it, right? Close above. Clicked buy right when time ran out. Okay, so you took this close above. 35? Okay. So you're in on this bar saying, whoa, that turned into resistance. No. 35? 35.3. Right before that bar ended? You didn't. Because that one closed at like 33.2. That's 3 points. Was it that fast? Whoa. That's one of the things about crude. Man, that is fast. But it did go right where you needed it to, which is nice. It did everything the indicator said that it would, Wayne. And I know that that's a late entry, but it's also a pretty warm, fuzzy entry with that giant bar that turns that back into support. That's 3-point slip. That happens sometimes. Gold will do that. And you know what it means, Wayne? It means that you called the right trade when it does that. I mean, it's still 140 per contract. Absolutely beautiful. Outer bands. Great trade. Great patience. Good recognition after the fact. I like that it's a different color. This is what I saw for the trade. This is when I came back and analyzed my chart to make sure I didn't miss something. This is how brilliant traders are created. Great job, Wayne. And thank you for spreading these out. Trend is up. Room to troubles. Went away, so clear path. The one-to-ones went away. With momentum, there's your snap back to the HVA. That's your momentum trade right there, Wayne. From 35. And it does fail. It actually does fail. Comes back, rolls, and then you take the trend trade. Is there a mid band or something in there? The only thing I don't see is an actual area. And it's doing everything the indicator said that it would. Use the HVA. Right on. Great patience on waiting to get to the right side of those triggers. I wish I could express maybe an interpretive dance just how important that is to the success on TradingView. We all try to fight them, right? But that just creates such an advantage. And Wayne, did you see that? That was the momentum trade. And it failed. But that's the first entry. And then great patience waiting for the next one. If the momentum trade fails, it typically turns into a trend trade. I love it. But you want them to pull through. I like that. You got a good plan. All right, let's see. Same thing, HVA. There's your close above. It gets you in on the next bar. And there it goes. Target one, hit your trailing. Stop at the HVA line. So you're back in with the signal and heading back up to Profitville. No. Target one hit, so trail stop to HVA line. And then it looks like you get back in. Thank you for not doing it all in one. There's your entry. Hit your target. Okay, so now your stop is at the HVA line. So you put your stop directly on top of the thing most likely to create a bounce if that retraces. Sounds weird when you say it like that, doesn't it? Thank goodness it didn't. Money. Nice trade. That makes sense. That took me a second to get on board, but I was there. All right, trend in the moment is down. Nope, trend in the moment is still up. So one of the things that I will absolutely stick to my guns on is until this bar finishes and those pinch and open up the other direction, these are technically still up. This is what Paul calls the gate. But let's go even further into it, Wayne. Clearly it hit a termination. Clearly they're looking to make the roll, right? The potential for the roll is there. So when you come to your small chart, odds favorable momentum down on that smaller, faster chart. That's a pretty good indication, Wayne, that change is coming, right? The immediate force is down. So you let it break and you take the momentum trade after the termination with the potential to roll, and it's just rock star all the way down. Let me read what you said. I would consider that a momentum trade. It's not the white bar entry. Where's your termination? 42? 42. It's close to a white bar entry. Opens below the HVA, so that would be your entry right there. And then when it breaks down and pulls back, almost right to the HVA line from the termination, man, this is like a crazy bastard love child between a white bar trade, a momentum trade, and an HVA trade, Wayne. But when you get rules met for 3 trades, that's got to feel pretty good. It's a great chart read. And it all starts with the termination on the large chart, I think. That's what sets you up for success on this one. I like the way you did it. And it all makes sense. Let it break. Let it pull back. Ride that momentum after white bar confirmation from a termination. It's logically, from a chart read standpoint, it makes all the sense in the world. Oh no! Click sell instead of buy. Done that one. All right. I say this every day Wayne presents these, and I'm going to say it again, guys. If you go back and look at your trades and talk about whether or not you followed rules, what you'll begin to find is that when you follow rules, you tend to take more winners. And when you take a loss that followed the rules, you don't sweat it. It's a good loss. And $1,600 day, even with the big oops. Great trading, Wayne. I believe this was Cav. Termination. He gets in on the way back up to trouble, gets out on the way down, taking advantage of the idea that you can't go more long anymore. Let's look for a way to go short. Uh-oh, John Novak popped in. Historically, he or she who posts the most losers ends up making the most money in the future. Those who only post winners are full of shit. No, my bad, full of it. And they lie themselves into doing it wrong forever. Now, John, you've only got 30 years with this company. Do you feel like that claim is grounded in historical study? That's it, guys. When I promised you everything you need to be successful, I told you that the burden is on you. All right, direction is up. Strong side of the triggers. Not much room to the mid-band. Odds favorable momentum. Snap back to the HVA. Ride that momentum up. Nicely done. Nicely done, Phil. Phil left. Phil's like, I can't hear you guys. I want to do it. I know you're studying the momentum trades. Good one. Maybe he'll catch the video. Not a new user trade. I love these. Strong top. Smalls down. Snap back to the small triggers on the large chart. Bonk, bonk. Guys, that's the 2004 edge trade. Nicely done, whoever that was. Is that you, Jen? No. Oh, that's Pete. Right on. Weak bottom, strong triggers, absolutely no potential to break whatsoever directly into a termination condition. F them fibs, says Pete. And then Pete says, but guys, let's be real. The momentum is good. I've got strong triggers, no divergence printed. I can define a low risk entry. I'll take this one and manage. Nicely done, Pete. Nicely done. Man, we made it through the first wave. Made it through the first wave. Let's get to the next ones. I feel a lot of good questions coming on. I got a feeling. Pete, Victor, why is it the same people posting all the time? Probably because they refuse to ever wonder if they're doing things the way they should. Victor, Nathan. Novak's cannot sing. Well, when we sing alone, we sound amazing. But when other people hear us, something gets lost in translation. Did you know that my oldest son, when he was like 2 or 3, used to say, "Daddy, no sing"? That's how bad Novak men sing. You picked my name trade twice, but you can disregard. It's their fault. That's exactly what I'm saying, Jen. I sound perfect. You guys hear it wrong. We'll figure it out, Victor. Market reverse out of nowhere, but provides momentum. But momentum is directly into 173 flavors of problems. And Pete says, I'll give it a go and manage assertively. That's his right. That's his right. Paul, the recipe never changes. So Paul asked on TV, not when a trend goes through. How about, Paul, when price breaks through an area? Because on TradingView, that's what we're doing. So when price breaks above an area, that area changes its flavor from resistance to support. When price breaks below resistance, full bar, it becomes support. So Paul, if you've got stacked areas, it has to break through all of the areas. So if I have, let's do this. If I have an area here, and I have an area here, right? I have to have this bar for that to be support. This one has already become support, but this one hasn't yet. Is that what you're asking? And if I have stacked areas here, even though this one is now resistance, this one is still behaving as support. So when you're stacked up like that, Paul, very often, it's just, there's nothing to do. When you're super stacked like that, it's okay to do nothing. Strong bottom, odds favorable, directly into a termination condition, run the fudge over, right? Run the fudge over. Thanks, Paul. It's easier than me using my imagination. Took the chance against the termination condition and lost. It didn't give Pete the opportunity to manage. He knew what he was up against. Pete, not strong triggers. That's a little bit of a red flag. To the tick, that's a little bit of a red flag. Victor, the trend is up. You have room to targets. Market pulls back to support. You trade directly into resistance. Had 3 losses before that. Was disgusted, so I just took the picture. Didn't even annotate. We'll do later. Apologize for not posting. I wanted to acknowledge. So traded into a termination and lost. Traded directly into trouble and won. But you had 3 losses before this one. Were they all trading into areas, Victor? That would be the question that I ask. Because you're not showing them. You're showing one, which is clearly breaking the rules. Were the other 2? So 3 out of 4 trading into areas lost, and 1 won. So is 25% good odds for a trading plan? This one had space? No, it didn't. This one is directly into an outer band in an area. 100%. This one didn't have. You're in at 1725. The bottom of that zone is probably 17. Well, the zone's swapped, but the top of that bar is directly into an outer band. It's your right, Victor. But if you're running 75% losers with no room to trouble on your entries, just because you made $1,000 doesn't make it a good trade, right? Whether it's a solid trade or a risky endeavor that you have already proven loses more than it wins has nothing to do with the result, because the greatest trades in the world will lose. And guys, some of the worst trades you ever take will fill your pocketbook. Termination, pull back to the large triggers, sell it on the way down, and it just didn't go, did it? Just didn't go, Jen. These trades, Jen, are way easier if the small triggers are not above the large triggers. There's a little nuance for you. It is. And I think that was probably the key. They never even had a chance to start to weaken. Still, it's consistent on the entry, just didn't go. But that's probably a very big contributing factor. For illustration purposes only, 4 to 5 ticks below triggers is 3 points worth of stop. Is this one where you would wait for an up bar to minimize? No, I don't give a shit about 3 points, Nathan. Was it, so for illustration purposes only, 3 points is 12 ticks, right, Nathan? Yep. How many ticks is it if you wait for a reversal bar that's 11 ticks long and you have to put 2 ticks below it? That's 13 ticks, isn't it? Isn't that more risk waiting for confirmation, assuming it's the perfect trade? You guys have to stop fooling yourselves into believing that a confirmation means safety or security. If you get in, no, you made that up. When you wait for confirmation, you omit the first step. No, Nathan, this is the wrong picture for that. The picture yesterday that you showed me where we had that confirmation is your large triggers, synthetics, were all the way down here. So you had the choice, go at the mid band and leave your stop where the market shouldn't go. Or you had the choice of waiting for confirmation so that you could put your stop 2 ticks behind it. It's a 100% different scenario than you presented yesterday. This is the perfect look. If you're scared of 3 points of risk, you will struggle as a trader. So make sure you're taking the right trades. Risky is taking the wrong trades. So for illustration purposes, confirmation bars do not create security. But if you have those split triggers, so if you got in at this fib, Nathan, and these large triggers are way down here, that's where you might choose to wait for it, because this would be 6 points as opposed to the 13 ticks. Does that make sense? Good picture, good question. I'm telling you, man, you are knocking them out of the park with the questions that you're asking. Odds favorable, 2 triggers, weak bottom, instant loser. Let's find out. All right. Dun, dun, dun. No squats in that bottom. So here's the 50-50 trade. And here's your picture. You remember when we said, hold on, let me go and get the big picture then. Dun, 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 dun. You have 3 trigger lines below that fib, right? That's a weak bottom. That's a weak bottom. If you're going to err, you're like, oh, well, it's 2 ticks above Fibonacci support. No. No. So, okay, let's do this. If my whole trade depends on that being a strong bottom, I said a tick or two, right? You're absolutely right. I said a tick or two. I also said that 2 triggers sucks, but you didn't want to wait that long. So if the likelihood of success on this trade is dependent on a strong bottom being the first rule, do you want to play horseshoes and hand grenades with your strong bottom? Mine would be no. I would make it hit that damn fib. Because there's no divergence on your large chart. There's no indication on the higher time frame that they were done. No divergence, no fight, nothing. It just popped up. Only 2 triggers through. Nice entry. Failed instantly. Super low risk entry. Right? But weak bottom. You don't have divergence on the small chart, but look what it hit. It hit the previous divergence. Huge gap in the triggers, making risks astronomical. Only 2 triggers through. And even more, large triggers are a full bar away. So the gap theory too. You don't. That's not a termination, but it's still a key area, right? But look what happened. Hits the midband, gap theory. So a lot of indications that it's going back down. And this is why taking the easy trades first is easier. But the strong bottom, and I don't worry about that pivot stop out. That's me just having a little bit of knowledge underneath my belt. But the gap theory is a pretty good indication. Your entry's spot on, man. If this one's going up, that's a great spot. And the fact that it failed quickly is beautiful. It's a low risk shot at a trade. 3 triggers creates a huge advantage. And I know that you didn't want that, so much so that we fictitiously changed it in the KISS plan to 2 triggers. But man, that's the wrong plan. Well, I closed the other one. We changed it back to 3 because you're more likely to lose the 2. Reach termination, no triggers through. Strong top despite the heads, that's up to you. Divergence is a good indication there, that maybe that's what they were looking for. Triggers down, larger rolling, clear path. Not even a 50-50, dude. That's a full-blown clear path. There's your line. There's 4 triggers below it. Do you see it? It's the perfect entry. No gap theory because you didn't hit anything. You didn't hit an area. No gap theory. Have momentum. Path is clear. Pull back to the area inside of triggers. Nathan, this is the one you can say cost of doing business. These guys are assholes. That's the one. First, it's momentum. All 4 triggers through. What do you mean the strength doesn't matter? They're down, they're separated, there's space. It looks ugly here because it went up. Okay. I see what you're saying. Are the rules met for the high probability trend trade here, Nathan? Cool. That's a trade that typically wins 70 to 80% of the time. Have you ever seen The Last Samurai with Tom Cruise? You should. That's your weekend homework. There's a scene in the video. I'm just gonna do it this way. And it's Too Many Mind. And what is being said, and I love this. I like going back to movies because I'm an 80s kid. What it means is that when Tom Cruise, is trying to fight this samurai, Tom Cruise is worried about the sword, and he's worried about the people watching, and he's worried about the guy that he's fighting. and he's not focused on the fight itself. And what happens to us is a strong top or bottom is only, it's not even mandatory. It says it on the checklist. It's not even mandatory. It's just warm fuzzies. If I have momentum, if my path is clear, if I have a pullback to an area inside of triggers, I take the trade. Weak triggers are less likely to break, but a termination condition has nothing to do with the trigger strength, does it, Nathan? It only has to do with the location. I never said when you reach resistance, define the strength of the move and then count triggers. So what you're doing right now is normal, and I can't stress that enough. But what you're doing right now is you're trying to add layers to create safety. And I reserve my right to be wrong about that. But it feels like, not that my feelings matter, you're adding things to the perfect trade because you believe it'll create a safer trade. And you believe that a safer trade won't lose. But I want you to see, strong triggers in, and it holds. Strong triggers up, and it doesn't break. Strong triggers in, and it holds. Strong triggers in, and it holds. Now, they're more likely to hold with weakness. Yeah, no, I get that, Nathan. I totally get that. Are you going to school to be an engineer? So what happens, man, is we'll do that. If 3 rules is good, then 5 must be better. If 2 time frames is enough, imagine what I could do with 4 time frames. And Nathan, very often, we're 1 trigger through on those fibs. No, they are, right? Because what's the recipe for the potential to break? 2 triggers through. So it goes back once again to that super simple lesson. If 2 triggers don't break through, it doesn't have the potential. If it doesn't have the potential, okay. So if you're caught between termination and potential, call it a weak bottom, if it makes you feel better. Let me show you the picture, Nathan. I love this picture. If both lines of the small triggers don't go through, the small triggers didn't go through. That's why we say 2. If both lines of the small triggers don't go through, it didn't go through. That is 1 line of the small triggers through the fib. Stopped it cold. Why do we say 2 triggers? Because 2 triggers is the look to create potential. There it is again. Only 1 line. So treat it like a car. If the whole car, the small triggers, doesn't get through, the triggers didn't get through. These 2 work together, but the 2, 3, 4 works for a lot of people. Does that make sense? So let's really try to keep it just super uber basic. If the rules are met, it's the right trade. No matter what happened here, no matter what happened here. And you can see, just looking back, somebody knows about this area, even though there's nobody there, but who cares? My rules were met. I'm going to take the trade. I love these questions. And if it seems too simple, you've got to make it more difficult. I think that's a really, oh, we saw that one, Victor. I think that's like a really common, really common. Odds favorable, clear path, perfect entry, didn't work. That's it. That's the trade, right? Cost of doing business. That's perfect, Nathan. This trade is just as good as that trade. Look at it. Momentum, path, entry. Momentum, path, entry. Good job. That's the hardest thing to do. 2 of them lost, right? So now I've got to question things. Now I've got to add stuff. Now I've got to try to make it more than it is. And the reality is, you can always go back to that core. There is no separation, so I can say there's not enough strength. I do have an entry area. If I choose to enter at the area inside of triggers without momentum, I have to believe the market could push lower, and it does. But over here with momentum, it bounces. Pretty cool, right? And it's almost too easy. Nathan, I don't know if you were ever in the room for this conversation, but I actually had a guy once. Good job, Jen. I actually had a guy call me once, Nathan, and he told me, he goes, Novak, you're full of shit. He goes, there ain't no way in the world 3 rules on 2 dadgum charts is going to be enough to find success. There's no way that's a trading plan for nobody. And he couldn't grasp it. He couldn't latch onto that simplicity. And he went away. And while you guys are learning how to make money, I don't know what he's doing. And he told me, he goes, I've failed at every trading attention I've ever had. I'm not going to make the voice anymore. But even though I've always failed, and you're showing success with this, I refuse to believe that it can be that easy. And that may be part of the problem, is it's hard to believe it's that easy. Good question, Nathan. All right, let's do this. Hold on. Work with, you gotta believe I have a plan here. Have you met me? Now I'm gonna show you something. Hey Wayne, have a great weekend, man. Great trading today. You're starting to add some cool little tricks to the core advantages. It's fun to watch. It really is. From my end, I know it sounds stupid, but it's fun to watch. All right, Nathan. And everybody in the room, not just Nathan. I don't want this to be the Nathan show. It can be. I don't mind. Nathan, do you remember the thing that I said? Separation is strength, even if I can't spell this morning. Separation is strength. Does everybody remember that very simple concept? Is there separation? Hold on. We're going back to too many minds. Is there separation? That is strength. Who cares if it's bigger? It's still separation. And that advantage of momentum ends right there. And that's it. And that's how basic it is. It has nothing to do with Fibonacci. It has nothing to do with price bars. Separation is strength. That's the most basic way to do it. It is. You can either see through it or you can't. Hold your hands together. And unless yours are broken like mine, they should fit flush. You shouldn't be able to see between your 2 hands, right, Nathan? Now bow your fingers a little bit. Do you see the light through your hands? That's strong triggers. Put your palms back together. That's weak triggers. Amazing. And it's not any more complicated than that. Separation is strength. Separation, colors have to match, is strength. And sometimes it hits something solid and that strength goes away. But it's always separation. Separation. I love it. We're making it easier. And it's hard to do that. I know that it's hard to do that. I know that it's hard to dumb it down because all of you guys are brilliant, right? All of you guys are so much smarter than me, and I like that because it makes me a better person. But when you are the village idiot, like I am, 3 rules, 2 charts, no gray, very black and white, you can find an extraordinary level of success with this software. extraordinary level of success with this software. No, I'm kidding. I'm pretty smart in some arenas. But it's one of those things, right? Have you ever sat on the couch with your spouse and they sigh, and they might have just been sucking wind a little bit, but it turns into this giant thing? What's the problem? What's wrong? What are you doing? Why are you sighing? What's going on? Right? Where we start adding stuff in there that isn't actually there. I don't know. That was a horrible analogy. But it's kind of like that. Pablo. Triggers up. Pulls back to the area. Oh, you went short. Okay, so termination condition reached. Took me a second, Pablo. I was thinking in reverse. So guys, check it out. If I can't go long, termination reached, white bar prints, opens below the white bar, Pablo, that's your go, right? That's your HVA trade where it actually hits. You can't call it an HVA if it's not coming from the HVA. That white bar with the close below the HVA, that's your cheat code. That lets you know that the HVA is probably coming, but there's really nowhere for this trade to go. So good job making your 25 bucks, but room to targets is imperative, especially if you're going counter trend, right? Give it a little breathing room. Give the sellers a little room to knock it out. It was up 300 there. Bottom of the support. It's okay to take fast profits on something that's counter trend, without a doubt. Yeah, that's the HVA rules. And that's because you're seeing people take these white bar trades in the room, and this is what we call a partial understanding of a trade setup. I don't know. I'm looking at your chart, not the live chart. Termination, smalls below the large, pull back to the HVA. That's your HVA trade right there, Pablo. Perfect. In at 28, at 29, stop above those 1-to-1s. And if this is really going to be a top, man, that mid band is really your first target at this point. Does that make sense? You omitted the pullback to the HVA. But what you had here, Pablo, was a good first shot. It just didn't have anywhere to go. That's what created the bounce back to the HVA from the termination with the smalls below the large. And that's freaking rock star. And it gave you 1, 2, 3, 4 shots to get in at that pink line. And it's already up damn near $300, $200. Good stuff, man. Remember, guys, if you're going to take new trades, don't be afraid to write the rules for that trade on the chart and make sure that you followed them. Miss Trina. Triggers up, nothing but room, life is good. Pulls into resistance, still resistance, hasn't changed from resistance. It's still resistance. That's support. Resistance, resistance, prairie dog. Do you see it, Miss Trina? You forgot to let your resistance turn into support. It worked. You don't see it? That's okay. When price reaches that area, is that area support or resistance, Trina? In a market moving up, it's resistance. Did you ever get a full bar above that area? Make sense? All right, so let's back it up and let's do this. Bum, 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 bum. When price reached these yellow 1-to-1s, they were resistance as well, weren't they, Trina? And then you got a full bar above, which made these yellow 1-to-1s behave as support. Are you picking up what I'm putting down here? And then it pulled back to the area of support. And then it did close above. So you broke rule number 2. But you were up, you were strong side, you had room to trouble. So Trina, if you were going to take a shot into a 1-minute area, can we agree that from support, smalls above and away from the large, from the strong side of the triggers, you pretty much went into that fight with brass knuckles? Now, it could have reversed the market, but that is certainly a market more likely to go up than down. And Trina, honestly, that's your momentum trade right there where it pulled back to the 1-to-1s. You did break rules, yes. Remember that momentum trade that you're studying? That was it right there. That was your momentum trade with about 4 ticks risk and room to trouble. And this isn't me trying to knock you down. I'm just saying, never broke support. You just picked the wrong adjective. It never actually broke resistance. But if we go back to the bar fight, it's you, Wayne, and a couple gorillas up against the Girl Scouts. A lot of reasons for that market to go up. Good job. And guys, I never tell you that you broke rules because I want you to feel bad about breaking rules. When I mention it, it's because I want to make sure that you know, because the rules are there to help keep you safe. All right, triggers up. Room to trouble. Pull back to the area. Close above. HVA printed. You got stopped out. 40, 26. Yeah, so the challenge on this one, Papa, it fits the rules. 100%. You had room to trouble everything. The challenge on this one was that they're trying to make that termination that's already been reached. They're doing their best to turn it into a top. And that pink line is right where that top was most likely to be official. So you did fit the rules. Good job. But if it's already been there, get your guard up at a pink line. That's a good lesson on that one. If it's already been to your target, watch those pink lines, because that's actually a trade the other direction. I don't know if you were listening in on Pablo, but look how those pink lines hold when they're coming from a termination condition. That's actually a trade that we've been teaching for years. It's called an HVA trade. Is there an outer band in the way? It doesn't look like it on mine. And on his, yeah, it's pretty tight into that outer band and those 1-to-1s. So not a lot of room on the small chart either. The outer band can create a bounce for sure. The outer band can definitely create a bounce. This is just that, man, I didn't get paid all the way up, but it fits the rules. Let's give it a go. There's just nowhere for it to go. Just nowhere for it to go. Does that make sense, Papa? What's up, GWC? Triggers are up. Potential to break. Pulls back to an area inside of triggers. Let's make money. Everything still says up. Everything went the same direction. I'm just going to jump the fudge in and make some money. I like it. GWC, I don't completely understand the second entry. I don't have any rules for that bad boy. First one is the perfect trend trade, but it is directly into a termination. You're not running synthetics. Second trade is just kind of jumping in, hoping that all those green indicators push it up, and it certainly did. That's kind of what I see. So the first one, if we go back to the very core basics, you did trade directly into a termination, but you weighed out advantages versus disadvantages, and you were able to turn it into a profitable trade. Change your language, Nathan. We are not okay with 3 points of risk on the wrong trade. You have to be okay with it, not we. I'll do some crazy shit compared to what you're comfortable with. Go back to the question of stop placement. We are okay with 3 points worth of stop, but for the new user, at what point should they consider waiting for confirmation? So let's do this 2 ways, Nathan. Let's answer it 2 ways. Nice job, GWC. It's good to see you, man. Dun, 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 dun. I love these lessons. I really do. Let me find a good picture. Oh, I've got the picture. You ready, Nathan? Man, here we go. Boy, I hate to beat a dead horse. What do you say we go back to the KISS plan? Because the KISS plan literally has, that's the wrong one because I'm a Yahoo. Here we go. The KISS plan literally has a management plan for you for the high probability trend trade. So we have to answer 2 questions, Nathan. The first question is it actually a high probability trade? Because that's going to dictate how I manage it if I'm following this plan. Or is it the 50-50 trade with 3 triggers through, 32 triggers through? Because that's going to require a different management plan. Okay, so let's start there. And then let's talk stop placement, because stop placement's universal. We're going to do it for a high probability trend trade. And this is on the KISS plan. So all these pictures are right here. And they're also the first 4 pictures in the orange section here. Yeah, but now I'm going to get real mouthy with it. You ready? So here's the perfect entry, right? Pull back to an area. Inside of triggers. Well, shame on you. I've given it to you twice. There it is the 3rd time. Download that bad boy. This is how you're going to drill those patterns in your head. If my entry is 7134, 2 ticks below the area of resistance inside of triggers, guys. The KISS plan, the very basic plan, the, hey, let's give you the highest chance of success plan, and really every way we ever do it, says that your initial stop is 4 to 5 ticks beyond the triggers. That's initial stop placement. Now, do you notice that it doesn't say your initial stop is where your guts feel good, your initial stop is where you're not scared anymore, your initial stop is an arbitrary number, 10 ticks, 12 ticks, something like that. So your initial stop will be $71.49, which means that you have $150 worth of risk per contract, which means that you're looking at $300 of risk on this trade. Now, Nathan, we're looking at a trade that typically wins more than it loses. We're looking at a trade with a high percentage of wins, right? Here's the deal. You know where your stop goes before you ever enter, right? When the market is like all the way down here, you're like, I know where my stop goes. It's consistent. It's not emotional based. It's not an arbitrary number. So if I'm doing math and I have a pucker moment, Nathan, I'm not cool with $300. What's your option? Skip it. Because what happens a lot is people say, well, I'll put my stop right here because it's only $40 risk, and I'm hoping the mid-band holds anyway. And they forget that the market could go all the way up here, their stop gets hit, and they watch the market run without them. That's emotion, not rules. Some people say, well, I'll just put it right here beyond the areas, and then their stop gets hit, and it runs without them. And it happens a lot. There was a lot of thought that went into this. So by putting your stop where the market shouldn't go, you are literally taunting the small crowd, the people that create the retracement, and you're saying in a very confident voice from your study, I know where my advantages are. I know where life is good. I know where I'm likely to not get stopped out. And if you really want me, this is where you're going to have to come get me. So, Nathan, if you're not cool with that number, it's your right to skip the trade. But here's the great thing. Typically 7 out of 10 times, it's at least going to give you a reversal bar in the direction of your trade. Now the KISS plan says, when you get a reversal bar in the direction of your trade, you will redefine where the market should not go. And Nathan, we do this because of the idea of what gets us into a trend trade. Because the idea is that there's this group of people that have created this giant downtrend, and we want to be a part of it. And there's this group of people that don't want to be a part of it, and they push up. And this reversal bar is the strong group getting back in their groove. So the sellers are in control, the buyers fail, the sellers take back over. Your stop goes a tick or two beyond where those buyers failed. That's where the market shouldn't go. And 70-80% of the time, you're probably going to get that reversal bar. And now you've got $30 worth of risk per contract, Nathan. $30 from your great entry. If you waited for the reversal bar, you still have pretty close to $300 worth of risk. So that's the idea behind stop placement, but it's always your right. If you're not comfortable with the number, it's better to not take the trade than it is to fudge your stop, is what history shows us. If you caught that HVA trade, that's a sexy trade. Does that make sense, Nathan? And then the KISS plan also says, no, the stop goes where the market shouldn't go. That's it. The stop goes where the market shouldn't go. And if it goes there, I want to be stopped out. And if it doesn't go there, I want to go to targets. So Nathan, that's the second half. So if you look at the KISS plan, for the high probability trend trade, your initial stop is 4 to 5 ticks beyond the trigger line. Your first stop movement will be 2 ticks above the bar in the direction of the trade, or below the bar. In the 50-50 trade, your initial stop will be 4 to 5 ticks beyond because it's a trend trade entry. Your first stop movement will be 2 ticks above the bar. Now, where the 50-50 trade changes, Nathan, is your first target is $100 in both. But if you've got trouble in front of you on a 50-50 trade, it's all right to take $80 to get to break even because it's a medium probability trade. And the big thing, if divergence prints, you'll just exit the trade. That's the difference between the 50-50 and the high probability. The high probability, you're going to let it run to targets. No. If you don't already know that there's problems on the large chart, Nathan, you're not doing your homework on the trade. You should have already said, my path is clear. So what constitutes a problem in a 50-50? Nathan, that area is not broken, right? Only potential. If I enter at this mid-band, that's my problem. It's not broken yet. It's okay to get paid there to take half off. Because if it doesn't break, that's going to happen. But if it does break, I still have a contract. Okay. So I'm going to show you something cool. You ready? No. This is going to be good for you. This is going to be good for everybody. Your large chart, Nathan, has fibs from the small chart. So if it's on the small chart, it's on your large chart. It has fibs from a 21. It has fibs from the 13. All of these fibs on your large chart are on your small chart as well. The fibs if you're running the stock workspaces, the fibs will always line up. That's not a termination condition on the small chart. It was on the large chart, but it's not on the small chart. I find my termination conditions on the large chart. Let me show you. Oh, I like this picture. I took this picture because this is kind of what freaked me out for a while. My large chart, because it's a bigger, slower time frame, because the bars are bigger, there's more movement like that, my small triggers can absolutely smash through an area, where on my small chart it may give the illusion, oh no, triggers didn't get through, I can't take that trade. But what it really is it's a good looking 50-50 trade. So it's really important that you really focus on where the rules are met, and force your large chart to define direction, momentum, and areas. Let this be the strong triggers that you're looking for in a high probability trend trade. Let this be the clear path that you're looking for. This is an entry chart. And when my large chart is perfect like this, Nathan, the only termination condition on a small chart would be 1, 2, 3 divergences in the same price range. That's the only small chart termination when this chart is perfect. Good stuff. I'm telling you guys, all you have to do is tell me what's on your mind and throw your questions out there. You will get answers. And if I don't give you the right answer at first, we'll figure it out. We'll figure out how to get you to where you want to be. That's why the education room works, Nathan, because you have the guts to go, okay, I don't know everything, but I will, because the money I spent on this software dictates Mark has to teach me everything. And guys, this is my favorite thing to do. I love doing this. This is fun for me. 3 triggers through. Divergence is a killer. Weak top is a killer. Let's see what happens just for grins. Not a termination that reversed the market. That's a weak top. Only 3 triggers through. That's not a clear path. Weak triggers on the 5-1. That's another rule that's broken. Divergence prints. That's another problem going on. That weak top kept you out with the divergence. Let's see if it pays dividends. It could go down, right, Jen? And if it does, I'll force it to give me a clear path. This is how I became a better trader, was by losing this trade enough to realize that it loses more than it wins. Not because I scrolled back and I said, you know what, I'm going to look at every 50-50 scenario and try to discern what the best option is. Because guys, there's a lot of ways to do this. What's the one thing I can give my users, my students, my people that will help them find more success? Well, the first thing is not having divergence. Making sure that there was an impactful decision at a key area that reversed that market. Those are 2 very simple concepts. The KISS plan also says, make sure you have strong triggers on the 5-1 because we're relying on momentum to break that area. And sure enough, if you didn't believe it, you just got your ass kicked. Do you guys remember when you'd go visit your grandmother and you'd try to touch a hot stove and she would always stop you? No, sweetie, no, sweetie, no, sweetie, right? And then you go home and you try that stuff with your mom and she's like, go ahead, asshole. You're about to learn a lesson. Guys, you've got to learn the lessons. You've got to touch the hot stove. Jen, you're a mom. You probably protected your kids 1,000 times from trouble, right? And then they get older and you're like, nope, you're going to have to bleed a little bit. You're going to have to skin your knee. You're going to have to take that trade. But you guys, do you see how even though it looks similar, it's very different circumstances? So you've got to learn the very basic. Because if you take this short as a brand new user, it stresses you out to take a loser. And if you don't know that that loser was avoidable, you're just going to keep taking it thinking the market hates you or the software is broken. Guys, this is the greatest software ever. The methodology is sound. It's solid. You can prove it. Most of us, and I'm going to say us, most of us refuse to take the time. Most of us refuse to take the time to learn the basic rules. Most of us refuse to take the time to learn the basic patterns. Most of us refuse to take pictures of our trades, write rules on our trades, and ask for feedback from the one person in this universe dedicated to your success. That's on you. It used to bug me. It really did. It used to get my panties in a bunch when you guys wouldn't participate. I was like, I know we can fix anything if they just talk to me. And my wife's like, that's not your job. Your job isn't to create courage. Your job's to teach them to read indicators. I was like, oh, she's smart. You have the rules firmly printed out. You'll say it helps. Not sure how long it took for you to say that and me actually do it. I don't know. Jen, you're still the only woman that listens to me, but you don't have to listen to me on the first shot. I am a man. I don't communicate well. Trina might be a close second. But guys, you've got to break rules. You've got to make mistakes. You've got to find your way. You've got to find your way. And the only way that you do that is by finding out what your way isn't. Most of us can't identify it in the moment. I've got so much emotion in a trade as a new user. I've got so much adrenaline in a trade as a new user that I believe wholeheartedly I took the best trade that could ever be presented on a silver platter. And it's not because we're arrogant or cocky. It's because we believe in our heart that is the right trade. That's why you have to take pictures. That's why you have to annotate your charts with the rules. Not just, oh, I went short here. You literally have to say, this is strong triggers. This is a clear path. This is an entry inside of triggers. And reinforce those rules. And then more importantly, you got to come back and study those trades. You will get feedback on every trade presented in this room. All you have to do is drop a picture. You will get what you did great. We will high five, virtual hugs, side hug. I don't want to get weird. We will talk about the challenges that were on that chart, even if it won. And I will tell you, holy shit, you got lucky. I can't believe that trade went up. It had nothing going for it. And we'll talk about that. And that's okay. But you're going to find that with a little bit of study, you're going to begin to recognize what works. And what works, and I'll say it because beating the horse, the methodology works, the software works, the rules work. Very often, the things that don't work are the things that we did, the rules that we chose to break, the advantages that we chose to do without. And if you don't go back and look at your spreadsheet, if you don't go back to that trade tracking and look at the feedback, you're going to miss your thing. Because I'll tell you, end of term, right? And this is what John Novak did with me. My spreadsheet said end of term, end of term, end of term, end of term. That was my thing. And then John Novak said, geez Louise, how many times are you going to trade into these lines expecting them to win? And I was like, I didn't know I was doing it. He goes, because you're not following the plan. Go back, look at it. And he gave me a recipe to fix it. And do you know what it was, Nathan? Do you know what it was, Jen? Do you know what it was, Trina? He said, if you're thinking about taking a trade and it hit a line and none of your triggers got through, don't take the trade. That's all he said. He doesn't give trading advice. That was sibling advice. He said if price reaches a line and none of your triggers get above, that's not your trade. Sit on your hands, do nothing. And guys, it got rid of my losers by like 50% instantly. But true story, I had no idea I was doing it. I had no idea I was breaking rule number 2 because I'd never studied the rules. I didn't learn how to count triggers. And that's the cool thing about the education. So Nathan, 2 triggers through, weak bottom. How do you feel about it? Stop goes there. You don't like it? But what if it works? Do we change our plan if it works? Does it work more than it doesn't? That's the question. Does this trade win more than it loses? And when you study and you believe absolutely this trade wins more than it loses, you can't wait to take it. Miss Kathy, I see your smiling face in here. One of the things that Miss Kathy has done, I praise Wayne's self-analysis a lot. Miss Kathy, on every chart that she posts in my room, puts this on there. And she says, Mark, I know this is the perfect trade. I know this is what I'm looking for. I'm going to start sticking these on my chart and holding myself accountable. And this only works if you understand what momentum is, separation is strength. And it only works if you can identify a clear path 4 triggers through. And the rules only work if you know that it's buy or sell a pullback to an area inside of triggers. And if you try to trade a plan with a partial understanding, you're going to get partial results. You guys threw me behind the pulpit again today, didn't you? Oh man, look at that. All that money not in your pocket, Nathan. I can't believe you didn't break your rules. That's messed up. It still hasn't broken. Oh, you're probably starting to feel better now. There's that divergence that likes to kill it too, huh? I really do. I love it. I had no idea when John Novak said, hey, you should learn the software. I had no idea I'd be this excited about it. I had no idea I'd be teaching it, and I'm thrilled to death to be teaching it. But everything that I teach in this room, guys, is the exact same lesson every day. Everything that I teach in this room is derivative of the plan, whether it's NinjaTrader or whether it's TradingView. And I try not to go too far out. We always circle back to the very core, but there's 1,000 things to learn outside of the core. And once you learn the core and you're not taking those losers that you shouldn't be taking, what happens is you have the confidence to take the trades that you should be taking. That's what I do. Into an outer band, that's a termination. Stop the small chart. That was your HVA trade. That was a momentum trade from an HVA line. And that's it. There's no more rules being met because there is no room. And if you made money in there, cool. And if you didn't, it's all right. There's time. And if you don't make it all today, guys, the market will be here Monday. You should be thinking about what time you're playing golf tomorrow. Unless you're north of me, in which case you should be buying snow shovels and de-icer. You guys stay safe. I'm going to give you guys